afternoon, everybody. Allie Corum and Ken Shreve here with a look at the stock market today. And on the show, we are going to talk about the action in the major indexes finishing off highs, but notable levels to discuss. And Ken, three interesting movers that we're going to check in on.
Yeah, kind of a weak close for the market impeded Nvidia a little bit, but the stock still reversed nicely higher after another bullish quarter. So we'll take a look at Nvidia. Also, another chip company that's acting well is Marvell Technology Group, MRVL, worth a look here. And finally, we'll take a look at retailer Macy's, which reported blockbuster results, and the stock soared as a result.
That it did. Well, first, our analysis of market conditions. Here's a look at the Nasdaq here, closing up about 0.1% for the day. So reversing higher, but fading a bit into the close. We also had the S&P 500 up about 0.1% as well. The Dow down 0.2%. And the story that we've been tracking for small caps, a bit of a worsening picture on that front today, down about 1.25%. So we'll check in on IWM as well. But for now, a look at the Nasdaq Composite here. So not as bad as it could have been, Ken. We're getting support, at least for now, at that 50-day line.
Yeah, I mean, compared to what the market looked like in pre-market trading, we had losses of maybe 0.7, 0.8, 0.9%, and we can see the Nasdaq did manage to end with I think a gain of about 0.1%. So it's right at its 50-day moving average here. Like you said, it could have been a lot worse. This whole weakening breadth story was on full display again today, with declining stocks outnumbering advancers on both exchanges by about 3-1. So even though we ended mixed and mostly unchanged, breadth was weak again, and big sell-off in mining stocks and a lot of these commodity stocks, oil weak. So some, again, damage beneath the surface, but technically the market is hanging in here.
It is. And one proxy for breadth that we can take a look at is the Russell 2000. So here's the IWM ETF, underscoring that weakness that we are seeing. Quite a string of losses here in a row, Ken. Volume on the move lower too, and now IWM below its 200-day line for the first time in a very long time.
Yeah, since the second half of last year, I think you'd have to go back and see the IWM with a close below its 200-day line. But yeah, this index has been lagging for quite a bit. There was reasonable expectations that it was going to be able to find support at this longer-term support level, but it is just not panning out here, and it's definitely the weakest index at this point.
Okay, and then a quick look at the S&P 500 and Dow are very similar. So not quite coming down to the 50-day line, but reversing higher. Other points that we've seen, the S&P coming down to the 50-day, that led to another leg higher. So is this time going to be the same, or is it going to be different?
Yeah, it's really tough to say. I mean, you have to respect the uptrend. I mean, we're still in a confirmed uptrend, and when you look at a daily chart of the S&P 500, you see why. I mean, this 50-day moving average has just been basically a trampoline for the index for several weeks now. So we'll see what a test of the S&P 500 eventually looks like. It came down close to the 50-day line today, but closed nicely off lows. And here's the weekly chart where we call the 50-day basically the 10-week moving average, but still an easy to see confirmed uptrend here. We've been talking about many yellow flags out there, and playing some defense when it comes to individual stocks in the portfolio. But for now, the uptrend has to be respected.
And as we know, conditions can change very quickly either which way, which is why you always have to be prepared, follow those rules, whether it's a loss cutting, maybe taking some profits, or being open to new buying opportunities in the market. And that's what we saw with Nvidia today, Ken, with a really impressive, at least intraday upside reversal after it closed below the 50-day line heading into its earnings report. Managed a gain of about 4% today, volume about double, a little bit over double average, but it finished well off of highs under that 200 price point, but at least we did see it close above the 21-day.
Yeah, I mean, listen, the stock managed a nice percentage gain. There were sellers in Nvidia today, no doubt about it. I mean, it looks like it closed right in the middle of its intraday range, maybe slightly in the upper half. So not a terrible day, but disappointing to see the stock close off highs. Its chart is definitely intact here. You can see it fell below the 50-day moving average yesterday, extended losses today, and then managed to close above it. So the chart is still intact here. Again, there were sellers in the stock today knocking it off highs, but you can see the growth this company is delivering in the latest quarter. Revenues up 68%, earnings up 89%. Their graphics segment is the fastest growing at this point. It's even growing faster than the company's data center chip business. So graphics segment up 87% to 3.91 billion, accounting for more than half of total revenue. So it was another really strong quarter.
And the action also prompted us to, in the pretty early going in the session, add it to swing trader with it taking out the high from 2 days ago. We also added a little bit more to our position on leaderboard as well. So we'll have to see where the stock goes from here. But I think relatively encouraging. Could have had a stronger close though, no doubt.
Yeah, I mean, listen, it was for longs, it was disappointing to see the stock close well off highs. But like I said, the chart is still intact here. We do not regret one moment increasing the position slightly on leaderboard today. And, we'll see what tomorrow brings. But overall, it was a positive response to earnings.
And elsewhere in the chip sector, let's talk about Marvell Technology, MRVL, reversing higher after coming down to its 50-day line in today's session, tacking on 2% to its share price today. Ken, volume was lighter than average, however, and we are due to see the earnings report for Marvell in a week's time.
Yeah, in fact, we're going to take a look at this one for an earnings option trade. They report next week, and yeah, really like the price action here. This company made a very, very smart acquisition earlier this year of Inphi, which was a big dominant player in data center chips. So Marvell bought them. I think the price tag was 10 billion, something like that. But yeah, and so this is a stock that is very well positioned now in the data center as well as 5G. So just going to the weekly chart here, I think the stock is looking pretty darn good here. Kind of a breakout from a long consolidation. Couple of tests of the 10-week moving average. Really like the look of the chart here. The relative strength line is just off highs, and yeah, wouldn't be surprised to see strong results from Marvell next week. So earnings preview column, we'll discuss Marvell. We'll probably take a look at CRM as well, Salesforce. So a few interesting technology names set to report earnings in the coming week.
All right, so a potential option, earnings option idea for you there with MRVL. Looking forward to that article from you, Ken. And another M stock, which who would have thought a year ago or 18 months ago that we would be here talking about Macy's on the show? But the retail sector has had a lot of winners over the last year with economic recovery. Macy's a part of that trend and skyrocketing on its results today, up almost 20%. And we were looking at this one on IBD Live when it was up, I think, 10, 11%, crossing above that prior resistance around the 20 level. And it didn't really look back.
Exactly right. And I think, you really do have to respect the retail sector here, not only Macy's, but, we got a very strong report yesterday from TJX. I know Ross is reporting after the close today. So there's a lot of retailers, Lululemon still acting well, a lot of retailers showing price strength and coming back from difficult times. But the numbers from Macy's were just really strong. I mentioned on IBD Live this morning, this company definitely has the N in Can Slim. New. What is new going on? Well, they've just gone through a major restructuring. They shuttered a lot of stores, but they're pursuing this sort of omni-channel strategy where they're trying to monetize customers not only from increased store traffic, but getting people to buy on mobile and desktop, and they're really making good inroads there. So not only was the sales growth through the roof and earnings way above expectations, they gave very bullish earnings guidance for the rest of the year, strong sales guidance. They announced a $500 million share buyback. They reinstated a 15-cent a share dividend. So it's no surprise to see the stock react the way it did today, and just looking very, very strong, huge volume, and a close near highs.
Yeah, and Dillard's, ticker DDS, another stock in the group that we've been looking at, and the retail department stores group, Ken, unseating different energy sector industry groups for the #1 slot out of 197 industry groups at IBD Track. So pretty impressive. Like you said, we got to respect that strength. So we'll be continuing to track this sector.
Yeah, no doubt about it.
Okay. All right. Thanks, everyone, for tuning in. We, as in the team, will be back tomorrow morning with more on IBD Live with Chris Gessel, your host. I'll see everyone on Monday, but don't worry for Stock Market Today. We've got you covered. Ed and Ken will be guiding you through what happened this week and what needs to be on your radar for the week ahead.
Absolutely. We are going to come hard Friday after the market. Ed and I will give that extended Stock Market Today video. Looking forward to it.
Can't wait for that. All right, everyone, make sure you tune in to investors.com/IBD Live, and the team will see you back here tomorrow.